Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Amarin Corporation, and let's just say it's got a little bit of everything. Shareholder votes, some wins, and a surprise rejection that's going to cost them money. It's like planning a party and forgetting the ice, a small detail that throws everything off. Want the inside scoop on corporate filings? Subscribe to our channel for clear, concise analyses. Join our Discord community using the link in the description below for even more insights. So what's the headline? Amarin held their annual shareholder meeting, and while most of the proposals sailed through, one key vote failed, leaving the board scrambling for a plan B. This rejection concerns how they compensate their board members. More on that shortly. Let's get into the details. This report is about what happened at Amarin's annual meeting of shareholders on May 13, 2025. Basically, shareholders got to vote on important company decisions. Almost all of Amarin shares are held by one company, Citibank. It holds them in the form of what's called American Depository Receipts, or ADRs. Essentially, these ADRs represent ownership in Amarin. A little over half the shares were voted in person or by proxy, which is like voting remotely. The company already told everyone what the votes were about in a previous document filed in April. Almost all the proposals were approved except for one, which we'll get to. Now for the juicy part, Proposal 12. Two big firms, ISS and Glass Lewis, said this proposal was a good idea. What it would have done is give the company's board the power to issue about 10% of the company's stock without having to offer it to existing shareholders first. That's where the problem started. The shareholders didn't approve Proposal 12. So what does that mean? Well, the company wanted to be able to issue new shares quickly, for example, to raise money. But now, because the proposal failed, they need to jump through more hoops each time. This is not easy and can be expensive. Here's how it gets more interesting. Amarin gives its board members a mix of cash and stock as part of their pay. Because the proposal failed, they will need to look at giving more cash instead of stock. Basically, board members might get paid more in cash to make up for the stock options they might have gotten otherwise. This will reduce the company's cash position. Okay, let's run through how the votes went. This section shows who was re-elected to the board. Each person was voted on individually. Aaron Berg got about 104 million votes for him and about 21 million against. Patrice Bonfiglio received roughly 100 million votes in favour and nearly 25 million votes against. Paul Cohen got around 101 million votes for him and about 23.5 million against. Keith Horn saw approximately 100.5 million votes in favour and 24 million votes against. Odysseus Costas got about 100.8 million votes for him, with 24.3 million voting against. Oliver O'Connor had about 100.8 million votes in favour and 23.8 million against. Louis Sterling III got approximately 100.7 million votes for and around 24.4 million against. Diane Sullivan received around 101.6 million votes for her and about 22.9 million against. This vote was about whether the shareholders agreed with how the company's top executives are paid. It's non-binding, meaning the company doesn't have to change anything based on the vote, but it's a good way to see what shareholders think. About 89 million votes were cast in favour of the compensation, while roughly 36 million were against. That's a fairly significant number of no votes, which might suggest some shareholders aren't thrilled with the executive pay packages. The shareholders voted to keep Ernst & Young as the company's accounting firm for the year. This is pretty standard. Over 227 million votes were for this and almost 16 million against. This is the vote where the company asked for permission to issue new shares, up to about 18% of what's already out there. This passed, but it's less interesting because the next vote, Proposal 12, didn't. We already discussed this one in detail. It was about letting the company issue shares without offering them to existing shareholders first. Since it failed, the company is now in a trickier position. Finally, Michael Torok received about 106 million votes for him, with 17.7 million against. As we mentioned earlier, because Proposal 12 didn't pass, board members are likely to get more cash instead of stock, which will hurt the company's cash position. So what's the big picture here? Amarin had a pretty standard annual meeting, but the failure of Proposal 12 is a bit of a headache. It makes it harder for them to issue stock quickly and could mean they end up paying board members more cash. What are the implications of the failed vote? It definitely throws a wrench in the company's plans. Not being able to issue shares easily makes it harder to raise money or make acquisitions. Plus, potentially paying board members more cash isn't ideal for a company trying to manage its finances. It could also impact their ability to attract and retain board members if the compensation package becomes less appealing. What are some notable risks? The failed vote is a risk because it limits the company's financial flexibility. Also, the fact that a significant number of shareholders voted against the executive pay package suggests there's some dissatisfaction among investors. Overall, Amarin seems to be in a decent position. Most of the votes went their way and they're still moving forward. However, this failed proposal creates a challenge, and how they handle it will be important. It will make the board revisit existing compensation arrangements for the non-employee directors will likely receive supplemental cash compensation in lieu of equity at an amount equal to previously approved equity value. What do you think about Amarin's situation? Are you surprised that Proposal 12 failed? Let us know in the comments. If you found this breakdown helpful, please hit the like button and subscribe for more corporate deep dives. Don't forget to join our Discord channel in the description for even more discussion. Thanks for watching, and we'll see you in the next video.